Did you know that 1 in 4 couples break up over money disputes? That's according to a study by Money Smart. Now, it often starts with, small little bickerings and disagreements about, how one person should save and spend and all these financial habits that we have compared to the other party, right? Many couples eventually do find their rhythm when it comes to daily shared expenses, but moving from core savers to core investors, that's a different ballgame altogether. It's a psychological leap that requires a real alignment on risk and future goals, just like individual investing, except it now takes two. Welcome to the Money Talks podcast. I'm Andrea Heng. Now, today we are looking at why leaving your financial future to chance is a risk that your relationship, even marriage, cannot afford. Joining me today with some real life experiences and perhaps some tips as well is Jeremy Tan. He's CEO of Tiger Fund Management. Welcome to the podcast, Jeremy.
Thank you so much, Andrea.
Okay, so let me start with that statistic, right? 1 in 4 couples breaking up over money, essentially, right? Why is it so hard for, even the most committed couples? You say I do at the altar, you have your future plan, but when it comes to money and when it comes to building an investment portfolio, why is it so hard?
Sure, I guess, many couples, I think they, at the start of their marriage, I think they can misconstrue that they actually get along quite well.
Mm-hmm.
But at the same time, I think when it comes down to money, I think that is really a very sensitive topic. And also, I think that there's a lot of difference in alignment of their risks. I think there could be some people that are more conservative in nature and also some that are more aggressive in nature. And the funny thing is that a lot of times, I think opposite attracts. And when they talk about money, and that's when they actually start to fall apart when some of this conversation starts.
So between you and your wife, who is the aggressive one and who's the conservative one?
Sure, I think that's a very interesting question. I think without a doubt, I think for myself, because I'm an equity portfolio manager, I tend to be more aggressive.
Okay.
Given
You're more adventurous lah.
Yes,
Yeah.
and also somewhat because of my background.
Sure.
I'm also more comfortable in terms of my education, my upbringing. So I'm more of a risk taker because
Okay.
I know the volatilities of the market. Whereas for my wife, she's definitely more on the conservative end. She's more of a saver. She actually looks at money more from the conservative angle, or more of a preserving that capital. Whereas for me, I look at money more from the angle of growing that wealth.
Okay, so how often do you guys argue about how different your investment approaches are? I mean, is it very frequent or and how do you guys sort of handle that conflict?
So I think for us, we were fortunate in the start to actually come together to talk about what are our attitudes, what is our end goals. And from there, we actually set aside a pool of money
Okay.
that this is a money that we want to achieve our goals. But at the same time, we do not put everything proportionally into that pool. I think it's still equally important to still maintain your individual finances, to also have your individual investments on top of your pooled account.
Okay, I'll get to that in just a moment, but I also wanted to ask you, when's a good time to have this conversation? Is it better or perhaps more recommended that I have this conversation with my partner before we get married?
Well, for me, I think that definitely you should not bring up the topic during the first date. I think that is a bit premature,
Yes.
right? I think perhaps you can actually send some test balloons along the way while you're dating
Okay.
to start looking at how people's attitude about monies, what are their values, how they actually are they a spender or are they a saver? These are things that you can actually find out, figure out even before you get married.
Yeah.
And once you reach a certain milestone, for example, like going towards marriage or living together, I think that is when you actually start to have a really more serious conversations
Yeah.
about the details, about your income, how each and everyone can actually come together to actually have that shared responsibility being taken care of.
Okay. You recommend maybe sending out some test balloons. I like that analogy, by the way. Test balloons while you guys are dating. Perhaps at a more stable time in your relationship, you think, okay, maybe this person might be the right one to spend your life with, right?
Yeah, definitely. I think at the start, I think it comes, like I mentioned at the start, perhaps when you're dating, you perhaps just want to just look at your day to day kind of your spending during your dates, or perhaps going for a short holiday, whether you guys are compatible financially in terms of that shared expenses. I think that is pretty important. Some people may have a YOLO lifestyle. They want to travel to Europe. They want to have amazing experiences, but that actually comes with a lot of money, right?
Yeah.
At the start of your journey. But I think that this actually helps couples to come together to, at the start, shape their concerted values about how they are going to guide their lifestyle going forward during marriage. And during marriage, I think the complication actually comes because there's a lot more in terms of your complicated expenses, in terms of your child, your housing, your day-to-day expenses. I think that is actually when you actually come together to actually talk about the details, and it's important to be transparent at the same time to actually come to that conclusion.
Yeah, everyone needs to be on the same page and be aligned. So let's put this into perspective of a couple who maybe have not found their rhythm quite yet. Okay, they're still finding their footing. How would you advise them to get started with investing together? Like, what's the lowest hanging fruit that they can aim for at least?
Sure, I think it's important to start small, take baby steps in any journey, so you don't just jump into a very aggressive investments, right? So all the way from very conservative investment, I think closer towards risk-free would be money market instruments.
Okay.
They are very stable. They are backed by the sovereign governments of the world. I think other than that, people can look at having joint accounts, having fixed deposits together. That paves the way for initial steps in terms of saving, and that actually would create a very strong backdrop of, I would say, discussion of finances together and planning for the future. And going forward, I think couples can take even more aggressive steps into equities, into bonds, and that is where I think the true test of your financial conversation comes. Because with all these investments, especially equities, many investors actually lose money. So I think it's important that couples have that communication in terms of their risk tolerance, because some couples, they are not actually they can't even take even 1% drawdown in terms of their portfolio, and therefore they will not be able to actually partake or even invest in this kind of asset classes. So I think it's important that at the start of their marriage to actually come together to talk about what is their drawdown and in terms of their portfolios.
Okay, I just want to kepo here for a moment. So what was the first thing that you and your wife invested in together?
So we did not actually invest into any asset classes, but the first investment that we invest in is our matrimonial home.
Ah, that is an investment.
Yes, it is.
Yeah.
So
Okay.
I think that actually serves as both investment and also your house. I think that actually paves the way for future in terms of when we have joint accounts, when we have investment in more aggressive asset classes. So I think that is actually a true, I think a beginning step for us.
Yeah, and it's a true Singaporean stepping stone as well. I mean, they say the BTO proposal is unromantic, but I think it's very practical, especially in this case, right? Okay, so when a couple starts testing their decision making, their joint decision making when it comes to these smaller investments, right? So, for example, we've decided, okay, let's buy a T-bill, let's buy a money market fund instrument, for example, together. What are the red flags first that I should be looking out for in my partner?
Well, in terms of red flags, I think it's really their comfort level, because when you go into this kind of discussion, immediately you can tell whether they are comfortable into investments, even if it's a T-bill. So I think the immediate red flag is whether they are defensive in terms of their communication with you into certain conversations into investments. Some of them do not even want to talk about it.
Wow.
Because they are just very fearful with investments in any form, even if they are risk-free.
Right.
So I think that education is actually extremely important to actually guide them, to actually educate them. Maybe one couple is more knowledgeable in terms of financial knowledge, to actually guide them, to let them know the risks involved, the drawdowns involved, and what kind of asset allocation that you are going to be investing in, and the maximum that you can lose from this investment.
Okay, so what are then the green flags? What's a good sign that this pairing works and we can say to ourselves, okay, I think we are not just a good match in terms of our personalities, but we are also, like you said, financially compatible. What's a green flag?
I think on the other end of the spectrum is that people come together and they are very excited in the discussion.
Yeah.
They want to have this joint discussion. They want to achieve certain goals, and they see that through this communication and through these actions, they are actually getting closer and closer to their end goal. Perhaps starting with investing in T-bills, money market instruments, they can get a very low risk-free investments, and then they can see that fruits of their labor, the fruits of working together, even though the contributions or even though the returns may not be large, but over time, I think they can see that working together actually paves the way for better returns for the future.
Okay. So sometimes, as you said, right, and I think you and your wife are a very clear example of this. One person in that couple is the more aggressive, more adventurous, so-called the daredevil. The other one is a bit more fearful, a bit more conservative, very hesitant to even enter the market. How does a couple like that find a middle ground? Because I know of couples who have one side being very aggressive and the other side very conservative, right? And the conservative one just ends up giving the reins to the daredevil in the relationship, meaning I don't have the stomach for this. I trust you. I can just let you do all of that. So how do couples find that middle ground when there are two such, extreme personalities?
I think studies have shown that perhaps one couple that is perhaps older or having more education or even a higher income level tends to lead this kind of financial discussions.
Correct.
So I think like I mentioned, the contribution need not be extremely equal. It doesn't have to be 50-50.
Okay.
But I think that perhaps the lead couple can actually contribute slightly more to give a bit more confidence for the other couple, because like I mentioned, it's important to come together to share this kind of responsibility,
Right.
to be part of that journey towards your lifestyle that you want, so that one couple can perhaps contribute lesser but still be engaged in the conversations, be engaged in the outcomes, the monitoring of the investment.
So participation is still the most important thing, because ultimately you want to be in a relationship that's, have parties both engaged at all times, including in money, right?
Yes, definitely. Conversations, I think that's extremely important.
So let's say my partner and I are embarking on this investing journey together. What are some top tips you have for us? What's the number one rule you would offer to a couple that's about to start investing together?
I think at the start it's definitely very important to align your risk tolerance and your investment objectives, because if one party's risk tolerance is really absolutely low, you would not want to go into something that is very volatile in nature or very illiquid in nature, and I think that could be a recipe for disaster. Right? So I think that, like I mentioned, the communication actually is extremely important at the start, to actually align your risk tolerance, your risk appetites, and also your investment outcome. What do you want to achieve at the end of the day? Perhaps next 1 year, 2 year, 3 year horizon. What is the goals that you want to achieve? Perhaps buying a new house or going for that holiday. I think it's actually extremely important to curate the right strategy for your right risk appetite to reach your objectives.
Yeah, and that one has to be a very clear discussion, because if the risk taker wants to take more risk, they can do that on their own portfolios. It should not have to be influencing the joint portfolio, and vice versa. If I'm conservative, I can be super conservative in my own portfolio, but I can be a bit more flexible in the joint portfolio, right?
Correct. I think that is also one other way, perhaps beyond your joint accounts, which you are which you actually set up for certain objectives, for
Yeah.
example, for your holiday, for your new house, for your new
Yeah.
child. I think that you can also still have your own individual accounts for your own personal finances and also for your own personal investments. For instance, like myself and my wife, she would have her own personal account
Yeah.
that is more conservative in nature, whereas for me, I can partake in more risky equity-like investments.
Okay. So we talked about the different personalities in a relationship, right? And that then influence and shapes how the couple invests together. What about when it comes to their income? We know that there are couples out there who have a very wide income disparity, right? One is earning more than the other. And when I say more, I mean much more, meaning I have that much more. One person might have much more capital to put into these investments than the other, right? So you talked earlier about how it doesn't have to be 50-50. But also at the same time, the contribution still matters. Then it needs to be of a comfortable level, right? So how should couples negotiate this income disparity when it comes to financial investing?
Sure. I guess for most people, I think most people don't have income levels that are the same. And in
Yeah,
fact, the age group can be, the age differential can be quite wide as well.
that's right. Yeah.
So, in order to reach a certain financial goal, I think there has to be that discussion and also that give and take. Because if you were to draw the line down the middle, I think that could be very difficult to actually achieve anything because one couple may not have the sufficient money to actually co-invest into certain objectives, and you perhaps during that period will actually miss out on that investment return.
Correct.
Right.
Yeah.
So I think that it's something that comes with discussion, something that's comfortable for both parties to be within their affordability, so to speak.
So some people find that documenting every single thing in a marriage, especially when it comes to these kinds of things where it can have legal implications, right, later on down the road, if things don't end up well, it's unromantic. So what do you say to that?
Well, I think that it comes down to what is practical.
Okay.
I think that perhaps day-to-day expenses, I think you could probably leave out from these discussions.
Okay.
But in terms of that big quantum outlay, I think that is where the disagreement or disputes will come, especially when the relationship turns sour.
Yeah.
So I think it's very important at the start to actually document some of these differences in terms of your contributions. And I know it does sound perhaps unromantic, but I think it's very important at the start to actually not only detail down some of this quantum that in terms of contribution, but in terms of the governance of some of these investments, like when do you actually sell,
Yeah.
or when do you actually take profit, when do you actually take the loss even.
Okay. And I'm glad that you mentioned loss because that was my next question. How can a couple jointly approach a loss when something starts losing money in their joint portfolio? How can they approach it without turning it into an ugly fight?
Yeah, I think first of all, it's important not to blame the other couple because as with every investment, I think there's risk. There's no investments that is actually totally risk-free.
Exactly, yeah.
So there has to be, at some point in time, there will be actually drawdowns. So I think that proper communication, that periodic review to see whether there has been any change in financial circumstances that require them to take the loss. For instance, if they cannot hold true to their investment objective, even though that is actually not I would say recommended because before you actually come into certain investments, you should actually know in terms of your own financial risk tolerance whether you can actually take that kind of drawdowns. So and you in terms of that drawdown, you will actually allocate based on your capital, based on what you can actually lose. And this is the maximum that you can lose and you can afford to lose during this horizon, and you can actually stay true to your investment objective and your asset allocation plans.
Okay, so you're the daredevil in the relationship compared to your wife. How would you explain and discuss with her next steps if something in your portfolio is losing money? How do you approach it with her?
Well, I think transparency is extremely important. I think it's important to do that kind of periodic review to see whether you guys have actually reached your target or actually has been detracted away from that target. I think there's no easy way. I think it's just to be transparent.
What would you say to her?
Well, I would let my wife know that the markets has turned sour. We have to tie through this period of time. I think these are conversations that you need to have rather than just hiding it behind the closet
Yeah.
and not having that kind of discussion.
Yeah.
In fact, many people actually hide their debts even,
Yes.
and that could actually balloon. Before, I mean, at the start, perhaps this can be a smaller problem when they come together to solve it. But with the longer period of time of hiding this kind of issues and problems, I think that could actually balloon into a bigger problem down the road.
Yeah, I think having that discussion is very important. So earlier you talked about income disparity. We also talked at length about personality difference, right? You earlier mentioned something about age gaps, right? So there is one party who is quite a bit older than the other. So obviously the older one will think of investing from a retirement standpoint, right? Do we have enough for retirement as a couple? And the younger one will say, no, let's grow more. Let's go for growth stocks. Let's go more aggressive so that we have, because I have a longer runway. I can take care of things and make sure that, I'm looking out for our best interests as a couple. So how would a couple with such an age gap and different priorities navigate that challenge?
Sure, I think there could be still a win-win scenario from there. I think that couples can still maintain a joint account, that they can have a concerted investment objective, or that they have already aligned in terms of their risk. But at the same time, they can still have, outside of this joint account, they can have their individual accounts that they can actually partake in different investments, whether be it conservative or aggressive. I think that will, in the end, still reach their goals because their joint account is still working hard towards their end goal, but at the side, they are still doing something that they are perhaps passionate in or confident in terms of their investments.
Yeah. Now, my final question to you, Jeremy. So I don't have a joint portfolio with my husband. He has one. I have one. It's never crossed our minds to have a joint investment portfolio, let alone a joint account. We don't even have a joint account. So is it a must? Am I losing out on opportunity here if we don't participate in a joint investment portfolio? Can I just leave things as they are? He has his own thing, I have my own thing.
Well, I think that perhaps even having different portfolios, I think if couples are still communicating and they are still achieving their end goals in terms of their lifestyle that they want to live, I think it's still possible to have different accounts. But I would say that having a joint account, even just a basic saving, would be a very good start to actually having more conversations and more teamwork in terms of how they want to chart their future together.
Yeah. So the biggest takeaways from you today, Jeremy: communicate, communicate, communicate. Always be transparent. Always have those discussions. And I think also, every decision that you make must be a joint decision. I think that's very, very clear lesson for marriage and relationships, but also in financial portfolios as well. So thank you for lending us your thoughts today.
Thank you so much, Andrew.
And thank you to our Money Talks community as well for tuning in as always. I want to ask you this question now. When was the first time you ever had that serious money talk with your partner? You can let us know by commenting on wherever you're listening to us from or watching us from. Or you can also write to us directly at cnapodcasts@mediacorp.com.sg. I'm Andrea Heng signing off for the Money Talks podcast, and I'm off to have that serious money conversation with my husband now. Bye-bye.